Somebody's got to deal with the debt problem. I mean,
Right.
your son he's still young. If people will do their research and figure and learn, get some knowledge about what's going on, they will get worried. They care about themselves and their jobs. They care about the short term. They really don't care about my children or even your children.
It's going to burn a lot of people. And so what are some asset classes that people should be looking at these days?
Well, first, Mark, I want to tell you it's good to be old. It's good to be an old American because we don't have to pay for it. We don't have to pay for it. Unfortunately, I've got young children, and the problems they are going to inherit are going to be staggering. You know, in the 1920s, the UK was the richest, most powerful country in the world. There was no number two. 50 years later, they were bankrupt.
Yeah.
IMF had to fly into Heathrow to London airport and bail them out. That happened from number one with no second to bankrupt in 50 years. So it has happened before. It has always happened, and it's going to happen again, whether we like it or not. Now, as far as assets, well, if you look around the world, bonds are definitely in a bubble. Bonds have never been this expensive in the history of the world. Never in history have bonds been this expensive. Property in many countries is becoming a bubble. If you go to Korea or New Zealand or many parts of America, property is in a bubble. It's clear. It's very, very clear. If you look at stocks, many stocks are becoming a bubble. Samsung goes up every day. Apple goes up every day. Tencent goes up every day. Not everything. The reason I'm not getting out of the stock market is because there's still many stocks that haven't gone up. Once everything is in the bubble, I mean, I see signs of a stock market bubble developing, then we'll have to get out. The only thing that's not in a bubble are commodities. I mean, Mark, silver's down 50% from its all-time high. Sugar's down 70% from its all-time high. Oil is down 50% from its all-time. These are not bubble kind of numbers. So Commodities are the cheapest asset class. But if you don't know anything about commodities, please do not start investing in commodities. For goodness sakes, if you want to survive all of this, stay with what you know, nothing else. Don't listen to me or some guy you see on the internet. Maybe you could listen to Marcy, but don't listen to most people. But unless you really know what you're doing, do nothing.
We may not have a lot of retail investors in this part of the world, but that deal commodities, but we have a lot of, people who do it as part of their business from an agriculture or energy standpoint. And
well, now you can buy commodity ETFs listed on the stock exchange, so it's a little bit simpler. You don't have to go and buy cotton futures anymore. I mean, you can buy some ETFs, and that makes it a lot simpler. But if there's inflation, that means the price of shirts goes up. Well, if you own cotton, you make money. You know, if the price of bread goes up, well, if you own wheat, you make money. You survive and you make money when something like that happens. But again, you must do your homework. You must be prepared. You must know what you're doing.
When you start to see signs of inflation with these levels of deficit, I think it's time to, at least have a plan when it comes to your assets.
You must have a plan, and you must know what's going on. You must listen to Marcy and Mark to know what's going on. So if you know what's going on, you're going to get worried. And if you get worried, you'll get prepared.
Exactly.
And then you might come out of all of this okay. I mean, there were people in the 30s who came out rich out of the 30s. Most, of course, lost everything. But if you know what's going on and you're prepared, many crises have happened in world history, and many people have come out of them very, very successful. So just do your research, know what's happening, and stay with what you know, and maybe you'll come out rich.
I think it's more important than ever for people to protect yourselves against rising taxes, rising inflation, or deflation, which could be an issue, or an even scarier prospect down the road. But
Mark, you mentioned before that there was a $28 trillion debt. That's what's on the books. Off the books, it's a couple of hundred trillions.
Yeah, we posted a slide the other day of the unfunded liabilities, and if that doesn't keep you up at night, it's
somebody's got to deal with the debt problem. I mean,
Right.
your son he's still young.
yeah.
Right.
He and my children are going to have a gigantic, horrible problem to deal with. I mean, I've seen many countries get into this situation and they all go into decline. I mean, I don't like saying it,
Right.
but it has happened repeatedly throughout history. Nobody's ever gotten this deep in debt and come out and said, "Oh, let's spend some more money, and we'll solve the problem of too much debt with more debt."
Yeah.
Never worked in history.
Right.
And-
There's a reason why history keeps repeating itself.
Yes, but one of the problems, Marzi, is that most people don't learn the lessons of history.
Right.
You know, you can sit and tell them this is history, and they, first of all, they don't care and they don't listen and they don't understand. And
Right.
even if they do say it doesn't matter, it's different this time,
Right.
or they say, "I'm smarter than history. I can deal with it." Well, I'm not smarter than history. I know that.
Well, and a lot of middle class investors just stick their head in the sand because it is so confusing, and there's so many they're getting so many biased messages. But they're getting conflicting messages. So it's scary out there.
Well, as I say, if people will do their research and figure and learn, get some knowledge about what's going on, they will get worried. And
Yeah.
then hopefully if they get worried, like the two of you, they will start doing something about it instead of just saying, "Oh, don't worry, it'll be hope." We have an Ivy League Treasury Secretary. Don't worry, everything will be okay.
We've explored the revolving door of Wall Street and Washington and the Ivy League and gold. There's a lot of people saying the same message and agreeing, and it's a lot of them getting rich and not a lot of Main Street.
Listen, they care about themselves and their jobs. They really don't care about my children or even your children.
Right.
Your children are older. No, they care about keeping their jobs. They care about the short term, and they say, "Well, let's do whatever we got to do to keep our jobs."
Yeah,
They don't
it's,
particularly
amen.
care about my children's jobs.